The broadcast is now starting. All attendees are in listen-only mode.
Good evening, ladies and gentlemen, and thank you for being with us today. Terry's typing away madly here. He might be going to tell me that, yeah, that's good, sounds good. Okay, we appear to be all ready to go, so welcome. My name is John Needham. I'm, as usual, your host for these events. And let me tell you, it's a glorious day down under in sunny Queensland, where even winter is beautiful. Lovely to see so many of you here today, so many old friends. Let me see, Al, nice to see you. Alan Varian. Alan actually is a Daniel Code tutorial guy who lives up in Brisbane and told me to, when I moved over here from New Zealand, said go and have a look around Mudgee Bar. Well, Alan, we got a place in Mudgee Bar, and I didn't like that too much, but we moved just next suburb over, Talai. And we've been here for about 18 months. Very nice, and thank you for your advice. Hope to see you again soon, mate. Bill Valleywild down in Melbourne. Bill's doing an awful lot of work on Daniel Code trading on stocks, getting some pretty fantastic results. Bill Ford, Bill, welcome. You all got a few questions for us today. My friend Boyd Yarn up there in Canada. Boyd, lovely to have you with us. Brian Baird, I had breakfast with Brian at the Broad Beach Surf Club last Saturday. It was lovely to meet you, Brian. It was a pretty darn good breakfast too, wasn't it, mate? I enjoyed that. Brian Coleman, who's likely to be our representative in New York shortly. Nice to have you with us, Brian. Craig, haven't seen you for a while. Craig Eyes. David Webb, one of our oldest members, with us here, the King of the Black Lions. Lovely to have you, Dave. Darryl Corey's a tutorial guy in Mossman. Darryl, hope's all going well with you over there, mate. Diane Rogers, long time. Eric Trotter, same with you. I've got a lot of Greg Mapes, haven't heard from you for a long time, Greg. Chip Stevenson, Chip, glad it's all going well with you. I haven't forgotten you, mate, or Hovey. As soon as you guys get free of your commercial commitments, let me know, because we need to do a couple of one-on-one follow-up webinars with you guys. They're tutorial guys from LA. Terrific guys. We had a ton of fun. I mean, we really did have a ton of fun at the last tutorial, as we always do. But we need to get caught up with you when you're ready, Chip. Hank Woolley. Hello, Hank. Hank's a very, very keen trader. I might even be able to get him to do a tutorial soon. Hank, there's nothing better you can do. That's Hank is actually Justin's father. We've got father and son, both members here. Helen Martin, God, a voice from the past. Helen's the Queen of West Australia, been a long time Daniel Code member, one of the very, very first people I ever taught trading to, and a great family friend, Helen. Lovely to hear from you, and let us know what you're doing over there. Lots of other friends here with us today. John Barnes, hello, mate. Justin. Justin's here as well, Woolley. Okay, we've got the pair of you guys, which is great. Peter Andrews, my old friend. Marilyn's with us. Hello, Marilyn. I haven't heard from you for a while. Michael Fowler, you're another one I need to catch up with, Michael. I have to get your some one-on-one webinars with you, mate, to follow up from the LA tutorial. Michael Peel's my great friend. He's normally in South America, Panama. He's now over in West Australia, Sage, and Darryl will be happy to know that. You should get in touch with him. Mike Midsos, hello, mate. He's a tutorial guy from LA, great guy. He's a Chicago fella. Peter Andrews, my old friend. Hello, Pete. Pete, email me your phone number, would you, mate? I don't know where it is. I've got a couple of new computers since we talked last, but it's time we caught up and had a yarn. It looks like we're going to have the next tutorial in Waiheke Island again, Peter, so probably around 6 to 10, 12 December, much like last time in 2013. So get yourself clear from that, and love to see you. Richard Brewster, my friend. Hello, Richard. Good to see you. Oh, God. Rob's here. Rob H. He's an old mate of mine from New Zealand, too. We've got a ton of people here. I can't... Sage, of course, darling Sage, always with us. I can't go on saying hello to everyone. We'll run out of time. Tom Janovic. Tom, I've got your email. I haven't replied to you. You're not, do forgive me, you're not being overlooked. It's just been Very, very busy week. Timmy's with us, Todd Timmins, my old friend, lots of us, Tony Craig, and Tony Di Domenico in Chicago. Hello, Tony, how are you? Okay, so lots of folks with us and lots of old friends there, and yeah, that's great. Okay, let's move on, folks. I didn't do the normal webinar 2 weeks ago for some reason, so I think it's probably close to 3 weeks since I've talked to you. Lots happening as always. So let's move on and show you some of the important things. Markets are reaching a very interesting stage, and Tuber Tom's been texting me here about moon cycles. It just happens we've got a bit to show you on some of that. Thank you, Sage, says that sounds good. Okay, let's move on, folks. We've got a lot to talk about today. We're going to talk about gold, of course. Pretty interesting situation in gold. I'm going to show you generally what some of the commodities are doing. We're going to get around to talking a bit about currency devaluation, and I want to make sure we catch you up on where equities are. There's an awful lot of the usual scare talk and drama that attaches these things. And I want to start with gold. When I was scheduling this webinar, it occurred to me that I'd sent out an alert to our private clients on my Sunday, your Saturday in the States. We're pretty much a day ahead of you here down under in Australia and the Shaky Isles in New Zealand. By Saturday, I was in fairly good spirits until I saw the rugby that night, and the All Blacks played very disappointing, and the Australian Wallabies beat them, which hasn't happened for a very long time. And I'm glad I got this private client advice out on Saturday because I was in shock on Sunday. This is what I meant when I scheduled this webinar and said there are moonbeams all over gold. You'll recall 3 weeks ago we showed you the advice from Frank DB, who helps me with the Fourth Seal stuff, and we identified then that there was likely to be an important low in August. Boyd's with us. I know you'll be very interested in this, Boyd. And we gave you some fairly extreme price targets. We've updated that. The Fourth Seal's updated every Monday, so those of you who actually subscribe to the Fourth Seal, what I'm telling you isn't new, but we said that there was likely to be, this was likely to give us at least an intermediate low, which it has done now. Just see how you build the case for this. You had all these red lines are moonbeams, and they're all over this chart at that low near early August. We'll look at this in more detail as we move through the charts. This is actually the chart I sent to clients on Saturday, private clients. Those of you who are interested, Tom T, I know you all won. You've asked about this. This is the sort of commentary that goes out to clients, and the last important one was back in June when we said that this consolidation was really arguing for further weakness. That was back in June the 6th, that advice, and of course we saw the market run down from about 1167 to 1073. So this low on the weekly chart 3 weeks ago, you know that came at a Fourth Seal line because we showed you that 3 weeks ago. And then we had almost perfect target recognition, 1073.9 on the weekly chart, which is what we do for private clients. And that low, let me just grab a chart here on the other computer while I'm talking to you. GSGC 1073. That low was at 1072.3. We were looking at 1073.9. So that's about 1.5 points. And, this stuff, that's like 0.001% variance from that Daniel code blue line target at 1073.9. So we had time, we had price at that number, and we also had a 59 cycle expiring at that week, which those of you who subscribed to the Fourth Seal would have seen. In fact, we had a number of time cycles there, and then we had a couple of weeks of sideways action, no further push down, which is what prompted me to say to clients that when time and price are squared, a turn is almost inevitable, as it has proved to be. So we have at least an intermediate low there, and we've had a very nice rally out of that. You can hear on this, you can see on this chart, which you should be seeing shortly. I think this is changed for you now. Yes, that we had many moonbeams. We had Fourth Seal support. We had DC time cycles. We had blue line target recognition, and we had contract expiry. And the contract expiry happens just here, where this little letter R for rollover is in a diamond. That was contract rollover. Those of you who are posting questions, please keep doing so. I will answer all of your questions. Let me just get through what we have to tell you here, so I'm not chopping and changing too much as we go along. I've told you many times that contract rollovers are prime places and prime opportunities for change in trend of markets. Now, that can mean daily trend, weekly trend, or something more important. But we very, very often see that markets get pushed into fairly extreme positions on contract rollover, which means all of the options expire worthless, which Brian Coleman, who's an options expert, knows all about. He could tell you about that for endless times. And then once that's out of the way, and the writers of options, who are the only people who make money trading options because they are systemically mispriced for retail buyers, by and large, once that's happened, then we often see this reversal and rally. This gives you the daily chart here to have a bit closer look at. And to back that up, we published a plus buy signal for you, where it's shown there, which would have been on the it was the day after the inside bar. So that plus buy signal was for Thursday, August the 6th. Those of you who subscribed to the Fourth Seal would have seen that coming. And those of you who subscribed to our TO3 Plus signals got that signal. And so far it's worth about $2,100 just in a pretty easy per one contract for a pretty easy 4-day trade. Let's move on. Silver. Funny, talking with Tuber Tom, I think it is, before this webinar started, Tuber was saying, or Tom, that he prefers silver. And of course, here's the same thing in silver. We actually posted the plus buy signal in silver the day before on the Wednesday, and that was elected. So that gave you a pretty good lead into the gold trade. And that's run straight up into the Daniel code blue line at 1554, which was a pretty good place to take profit for 4,400 per one contract. Or if you're still in that trade, you have a little bit less today, but still very nice trading. I don't know if we've got the right chart here to show you. I think we've bolted over to wheat, but I'll come back to you. But there was a full moon right in the bottom of that low consolidation for gold and silver, which was the other trigger. That moon cycles work particularly well on silver and the S&P, or the more obvious ones do. Moon cycles work on all markets, the bite of that just reinforced all the other arguments for some sort of a reasonable rally, at least in gold and silver, and maybe a bit more, and we'll talk about that, Boyd, as we move along. This is a wheat chart, and I want to show you how powerful this stuff is. I'll just grab the little highlighter here, my spotlight, and you can see that down here, let me get the appropriate chart up elsewhere so I can give you these dates. Bear with me, it's coming like Christmas. And it was wheat we wanted to show you here. All of these commodities are in very, very similar positions, and we're going to talk about that on the longer term charts as well. So here's wheat. This bar here, which was in fact August the 3rd, excuse me, it issued a plus buy signal. Those of you who subscribe to our TO3 Plus service, you got a nice trade, didn't look too flash the day it was elected, which was the very next day, Tuesday, August the 4th. But up it went, and look where it ran to. It ran exactly to the old 74% Daniel code retracement. Those of you who are not using these Daniel code numbers are really missing out on a lot. Markets run to these numbers all the time, and with a very, very high degree of accuracy. So you can see from here, this was, if it had been the right way, if it had gone into that blue line with the close lower than the open, this would in fact have been a blue line buy signal, because you had all the other components. You had the fast stochastic oversold, the slow stochastic oversold, and you had a high degree of divergence at that low, but it didn't meet quite the technical requirements to be a blue line signal, so we posted it as a plus signal. Up it ran. Look what happens up here. You hit this old 74, it ignored it on the way down. We see this so often that markets run through Daniel code numbers, but then they'll go back and test them from the other side. And you had your fast stochastic overbought at that stage, and that, amongst other things, set up the TO3 sell signal, which we issued for the next day, and down it went. Soybeans, pretty interesting, and I'm showing you this stuff just to try and get through to you how much more there is in markets than possibly you might see. And you do need to have the right tools to see what's evolving in these markets, and the Daniel code numbers are an essential part of that. This is very much the same as wheat, that we had this bar down here, and I'll just find its date for you, make it a bit easier. So that was August the 3rd. This is almost a carbon copy of wheat, but it's a bit more easy to understand why it did it. This could have been a blue line signal, was pretty close to it. The target recognition wasn't really close enough. The low of that bar was 929.2, and these grains trade in a quarter, so 929.25 was really, almost 8 ticks away from our blue line at 921.6. So that wasn't really target recognition. We could argue that this fast stochastic was oversold, because in fact it had been oversold way back here. It already turned. We certainly had a ton of divergence on our momentum indicator, and the slow stochastic was oversold as well. But sometimes when these signals don't set up perfectly, they give you the same result anyway, which is what this one did. And it rallied back up into this retracement. Now, this is the retracement from this low here, which is the 803 low, up to this major high, which was on July the 14th. That's no longer the operating range, but I put it on to show you how accurate this stuff is. Same thing as wheat, runs up into this number, 996 3/4. We were looking for that high there was 996.5. That was 1 tick away from the red line retracement. Fast stochastic was overbought, and whoosh, inside bar and down it went. Lovely, big, huge, massive bar now. That did not become a website signal because there's no divergence. If we look at our momentum indicator from the day, which is the high day, to the day before, there's no divergence. And if we compare the high of the momentum indicator to the previous high, there's still no divergence, and that's the two ways we do it. So that did not become a website signal. but it was a signal for those of you who've done a tutorial and understand how to trade the short-term time signals that Fractalian creates. So it was as clear as can be on that. So all of you guys who were LA tutorial or reasonably recent tutorial people should all be saying, yes, lovely, got all the lovely lolly, and you should have had a great day's trading out of that bar. And look where it went to. Here was the next annual code number at 9026. That low ran all the way down to 9014, which is only 3 ticks away from the number, and it closed at 910. The number for the black line, David's the expert on that, David Webb, was 910.4 at the black line, and that thing closed at 910, 2 ticks away. So it's really screaming at you that it knows the Daniel code numbers, and markets do this all the time. They track these Daniel code numbers. So if you're not getting the members charts, or you're not spending enough time studying them and putting the DC retracement tool on your charts, this is the incentive for you to really do more of that. This here is what's called the CRB index, and this is a combined commodity index, and it's pretty telling. This is a composite index that tracks commodities, and you can see that commodities are having a real rout, as they should have. We sort of had a super cycle boom back in 2010. Then we had a little bit of weakening, and now we're getting the next leg down. And this involves all major commodities. We've had oil down, way down from well over $100. We've had iron ore from 117 down to about 50. They're the really big, heavy hitters in this index. The grains are doing the same thing. And look how precise this is. If you want to know what this stuff's doing, put on your Daniel code numbers, use your Daniel code retracement tool. This market ran down, even though this is a composite, it's always just as accurate. Ran down, hit this 552.9 number, rallied back up. There's a minor retracement. Down it came. 2 weeks, this is a 6-day chart. 2 weeks it held at this same number. Then it broke to the next number, 506, rallied back up, came back. There's a whole lot of testing of 506 going on in here. Little rally up, breaks down, gets down to the 417 number, overshoots it, says, whoops, I'm sorry, rallies all the way back up, tests it again, and now we've got the break here. And this may look dramatic to you, and it's causing a lot of comment in the press, but really it's not so dramatic. All of these markets are still at very, very high levels historically. It's just that we have short memories and don't look at long-term charts, so that it appears as if this is a disaster, and it's not. All the drama in Australia is a good example of iron ore being at around $50, $45 to $50 at the end of the world. The long-term price, the long-term average for iron ore is actually around $30. So even though we've seen these pullbacks from the absurd levels of the top of the boom, these markets are still above their long-term mean, and they could still have quite a way to go. And theoretically, that should be very good for consumers. Anyone who's got a family or a wife, or you do the shopping yourself, you can't help but keep saying, goodness, how does everything cost so much? And that's the same all over the world. Nowhere more so, I might say, than in our semi-socialist Australia and New Zealand, where we're paying $1.48 for litre at the height of the oil price, where it was more than 2.5 times what it is now. We were paying $1.53. We're still paying $1.45, $1.46, somewhere around there, even though the oil price has dropped by about 2/3. So, I mean, it's all the rest, of course, is tax, with the dreaded consumer taxes, which we all don't have the brains to protest against. I can remember when they brought in this goods and services tax. John Howard was Prime Minister, I can remember saying, no, the Australians will never vote for this. You wouldn't believe it, they did. Same in New Zealand. So we're a bunch of uninformed, apathetic people, and we pretty much get what we deserve. But commodities have got a long way to go, I think, and that might have some implications for gold, which we'll come to shortly. So this is our compliance page, which I'm required to show you, as I do every time, to tell you that there is a risk of loss trading commodities, and there's an even bigger loss if you don't absolutely know what you're doing. Okay, so as usual, here's the details. If you'd like a free trial of anything that we have at the Daniel code, you just click on the banner, which I'm going to show you in a minute. Register a username and password, send that to Terry, support at thedanielcode.com, and he'll be happy to turn on a free trial of everything that we have for you. So we can now move away from here. Let me get my other tool back. We can move away from here, and we can go start looking at some charts. So I want to get this running here because this is going to take an awful long time. Just so you know, this is a slightly updated version of Fractalian, which we've been trying to perfect for you for a long time. We're hopeful that we're making great progress on it. But not yet are we there. So I wanted to, but it's an amazing tool for analysis. And I want to show you the testing of gold for July and prove a point with you. So this you can see is GC. This should be GC3 067. I need the electronic contract. That's that one, 067. We always use the 067 contract for our testing, and I want to test it from July the 1st, July the 31st. And you can see down here we're testing 6,650 different combinations of trading in gold for the month of July. So we'll just, maybe that wasn't so smart because that's going to be annoying having that processing base there, but look, maybe we can put up with it for a while. I'll just move it over the side. So here's gold on the 6-day chart, and you've seen this chart a number of times. We followed it down, and we saw this red line is a fourth seal line, and that gave us a pretty important support back here in the 6-day period ending July the 23rd. And we were looking for when we had time cycles expiring there as well, which I am going to show you in a moment. We had time cycles there, and we also had price, and the price we were looking for at that juncture was 1091. That comes straight from your Daniel code retracement tool. That's this little guy here, Dan the Hedgehog, this little picture. If you don't have this on your Trade Navigator charts, it means you haven't got the Daniel code library installed. And if you're a member, you get that free. So do contact Terry at support if you don't have that. These markets just keep running to these numbers. Here's this market coming off its highs, hits this cycle. There's two different cycles in here. You can see there's one that runs to this low and one that runs to this major low over here. And there's some minor cycles as well, but they're the ones the market's following. And we know that because it tells us. So here's this cycle here at 1502. This one's 1554, I'm sorry. And the market hits that, rallies for 5 weeks. Down it comes, runs through the next cycle, but too much enthusiasm, rallies back, comes back, finds this cycle on the close. Remember, these numbers are valid on the bar high low or on the close. Breaks down to the next level, 1186.4, rallies back up, hits this 1424 Daniel code number from underneath. This is the one that was sloppy on the way down. It found it on the way up, it retested again. Same thing here, finds this low, 1186, second or third time it's tested that, back up with the rally, closes at 1355, just near that 1362 number. Another little test, another little rally. Breaks down, test this number again here. 2 weeks up, down. Here's the next number. Rally, 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 all the way back up to 1302. Back to test the 1138, and now we get the run down to 1091. And here's the point with this, that I've told you that this target recognition is valid on the bar high low or on the close. So if we change this to a close only chart, which you should be seeing pretty soon, this should have changed for you. It has. Look at this. Here's this low. Here's this low. And this close is at 1089.4 against 1091. So that's 1.5 points away on a 6-day chart running from 1091 up to the all-time high. That's a very, very small variance, and that to me is very persuasive that we have some sort of a low in here, that we don't know in advance whether this is the low or just an important low or simply an intermediate low. Nothing in the Daniel Code tells us about quantum, and we don't have foresight. We don't have the gift of the future, and nor does anyone else, and anyone who tells you that they do is a liar. But we do have set rules that have been proven time and time again over many years, and when we see these sorts of things happening, we say that raises a high probability for what comes next. So that's that. The other thing I want to show you is what's been happening on the fourth seal with gold. This is prepared by Frank DB, an outstanding student of mine who lives in Belgium and helps me with this stuff. And he's put here, this is the latest fourth seal. This was updated on Monday. And you can see all these cycles. This is various charts in here. This is the probably this is the longer term chart. You can see there's a 59 cycle sitting right at that low, and then as you move on, then you can see we've got a 59, a 62, and a 44, all 1 bar away from the low, and then some more 89, 62s. Now 62 is the number that normally we expect to give us lows. We know that these numbers can invert, and they can also, a 59 can give us a low, as it did the crash low in the S&P after the in March 2009. But the predominance of these 62 cycles tells you there's a ton of support in just under this market. Now, I want you to take a moment to read this. This section here is Frank's comments from last time. This is how he does it. He puts in what he did last time, and then he puts in where we're up to now. And what he was saying 2 weeks ago, it's beginning to look like the targets we told you 3 weeks ago might be a bit too stretched. Remember, we might have seen the swing low already. We rise from here and maybe come back down to test the red line later in August. I think that's still a possibility. So if you can read through that, you can see the latest update. It says we're due for a rally, probably even a rather strong one. 6-day chart of gold has a 59.44 cycle low kicking off on August 11, 62 cycle low for next DC week. We expect the low to unfold this week. Follow the DC rules to get elected into the turn, which is what I showed you with the plus signal. So, folks, it's all there for you between what we have in the fourth seal and the daily TO3 and plus signals. We don't miss many, and for those of you who want to be seriously good at this stuff, who've come to a tutorial and learned how to trade the minor time signals as well, I can say that we don't miss any at all. So let's move on. I think that's probably all I had to show you in gold. The probabilities are that we have at least a, well, we do have, this is finished, we'll get to that in a minute. We have with this sort of target recognition here on the 6-day chart tied up with what we've also seen on the members weekly chart, the private client's weekly chart shows you that there's a strong possibility here of a rally. Where'd it go? Well, have a look at the DC members charts, and that will give you a very good idea of the targets, and we just watch them as they get ticked off. However, does that mean it's the end of the downtrend? I don't think so. Let me just see if we've got gold on the. Let me see if we've got gold on the at 12 GC3. Here we are. There's gold. Nothing on that. Must be on the 24 SP trend. Here we are. This is the very, very long-term trend of gold. This is a 24-day chart. There are normally 22 days in a trading month, so this is something equivalent to a monthly chart. So as you can see, gold is still in a very, very strong position. I know it's pretty damaging to bullion people if you bought any time after about 2010. Although if you'd come to our September 2011 webinar, you would have been told, as Under Par was told by me, that that's the high in gold, and you could have got out as close to the absolute all-time high of gold, plus or minus about 1 day. But it's still in a very high position now. These markets then retrace sequences of the recent swings. That's how they work. They have to correct the first swing before they correct the others. And this is the major swing all the way from the high back to 1999. The swing this is correcting, the first one runs into here to this low here, and it's just hit the 50% retracement on the 24-day chart. 1088.5. We have a 62 time cycle on this chart expiring September the 3rd, and this is plus or minus 1 period. So that's why Frank's been telling us that August is going to be an important month for a possible low, and that looks pretty good at the moment. So long as that number is held, the inference is that the trend is still up. Now, I know it's hard for you to accept that if you are been burnt in gold, but that's what the analysis tells you. That's still holding a strong position. And don't forget, the great beauty of gold is that it's one of the most tradable markets most of the time. And I'm now going to show you why I say that, because what we've run here, this is our optimizer program, and we've run gold for the whole of July. And you can see that from 6,650 tests of every known combination of trade signals for gold in July, it didn't make any real money. $1,000 was the absolute best, and that would have been like picking a pin in the haystack to have found those combinations. And you can see that most of these are losses. So what happens is markets do go into dormant periods. When you look at the daily chart of gold, which I may or may not have here. Now this is wheat. Let me see if I've got gold here for you. You can capture the whole of July's price with 2 Daniel Code trading channels, and here they are. So this is what's happened. This is June the 5th, running through June. Look at this. This is all sideways essentially until you get a breakout bar. Then from here on, again, it's all sideways and small bars, and you get one big breakout bar on July the 20th, and since then to the end of July, it's all sideways. So there are times when you can have every signal correct. And through this period, those of you who've done a tutorial recently can all put up your hands and say, yes, I could have picked every single buy and sell in this market and not missed one trade. In other words, I could have been 100% right on the signals and still lost money. And what you needed to be aware of is that when you see these small snappy ranges and the trading channels getting narrow like that, that's the time to say stop trading that market and go and find something with a bit more volatility, or alternately, as you can see down here, then that's the time to say you need to take profits at the high and the low of the Daniel Code trading channel. Okay, so there are times when markets just go to sleep like this, have long periods of consolidation, and even though this period through here looked reasonable, it wasn't. There's only one bar here that gets out of its own way far enough to give you a profitable trade before you get the counter signal. And that's why you need to have these Daniel Code trading channels on your charts. And there's a video on how to do that at the Daniel Code website. Or if you come to a Daniel Code tutorial, I'll teach you the much more advanced way of using these trading channels to create buy and sell signals and targets, and pretty much most of the other things in life. Okay, so let's move on. And we had, Bill, we had some questions. I'll just open my email here. We've had a number of questions from Bill Ford. You've given us some questions. You were interested in the DX, the US dollar index, and also the Aussie dollar and the Swiss franc. So we've got questions from you to deal with that. And we've also got from Michael Peel. We've got, who's a tutorial guy, great friend of mine. Michael's got a few questions about crude and wheat and a few other things. So let's get cracking on that stuff, because as usual, when you're having fun, time is running by. And let's see what's happening with these other markets. So whenever we can, we use the index, folks. This is the index on DX. It looks like we haven't for this case. It would have not much difference really. Here it is. This is DX. This is the US dollar index. Let me scratch this stuff up so you can get a better perspective on it. And what's actually happening here? This is the the all-time high back in 2001, and it's up there at 118. And the long-term median for this is somewhere around par, which is 100. It used to be that was the benchmark. That's all changed now because there's so much intervention in foreign currencies. And the DX, the US dollar index, is an index of the US dollar against a basket of other currencies. And there's so much intervention in other currencies by governments trying to devalue or central banks trying to stimulate that is no longer the case. But interestingly enough, this market ran all the way down to make its low in here, which is going to be around about April 2008, from where it started to rally. And if you put on your Daniel Code trading channel or your Daniel Code retracement, this little guy down, the hedgehog here, from this low all the way up to this high, you'll see you get these numbers. And this market starts to rally. It runs up. It hits this 85, 95 area. It has a 2-week consolidation there, just to show us it's recognized a number. It runs up further. It misses the next Daniel Code number. The next one's at 93.39. It runs straight through there, and then it, as if to say sorry, it turns around and it tests this number from the other side. And that's the market's way of showing us that it knows and recognizes these Daniel Code numbers, and it's virtually saying, excuse me, it's saying, I know what these sequences are and I'm tracking them. So if you don't have the Daniel Code numbers and you're trading, you're doing it with one arm behind your back and probably 2 legs chopped off. So those of you who are seriously interested in trading, I do urge you to get the Daniel Code members charts at least. And for those of you who want to be seriously good traders, come to a tutorial and I'll show you how to do this stuff on 6-day charts, 12-day charts and everything else. And you will be on your way to becoming a master trader. But whilst we have so much on the website to be hardly true, there is another level beyond that for which you need personal tuition. You need to come and spend a few days with me. It's not so onerous. Everyone who's ever come to one of our tutorials has had a great time and enjoyed it as well, because we do have a ton of fun. But you get this sort of knowledge, you are going to be a seriously good trader. So that's what happened there, Michael. 100.83. You're a tutorial guy. You should have had that number on your chart, and that stopped the run up. It then turned around, starts running back. Where does it go? Now down to the Daniel code number, 93.39. That's the old number, but it's still holding this market. 2 weeks up, hits that number again, and now it's drifting around 96.15. What happens now? I suspect that, don't forget, all markets are manipulated, and this one is no exception. I suspect that this market is not going to go a lot higher at the moment, because higher currency makes the commercial interest in that country uncompetitive. This has had a decent rally. I suggest the probabilities are is that we get a consolidation, maybe for quite a period of time, before this market can go higher. Odds are that it stays below 100 for the foreseeable future. And remember, with these forecasts, any comments I make, they are only based on probabilities. We have no certainties in these markets or anything else that we do. So that's where the DX is, Michael. That's what it's done, and that's what we expect it to do. Here's wheat. I've shown you a daily chart. Here's the, I wonder if I put some of these, were pretty incredible, and I put them on the big 24-day chart. That was gold on there. I don't know if we put DX on there. Let's check it. Nothing on there. Dollar DX would be the other one. The dollar sign in front means it's the index. No. Let's have a look at wheat. It's just following pretty much what all these markets are doing. We don't seem to have anything terribly exciting about wheat. Look, you can do this yourself in 5 minutes. Here's the this chart only goes back until 1969. You can see that there's a median price through here. You stick the Daniel Code trading channel on, and you can see that the long-term median is around 600, bit below. Where's the market now? Well, just running up and down through 600, which is the most logical thing for it to do. So you can also have a look, put on your Dan here, retrace from the high to the low, which will be this bar here, and we can run this right across here so we can see what's happening. And if there's a 74, it looks to me like it's actually that's so sloppy that it's obviously retracing a different cycle, and we'd have to go further back to do that. But it's consolidating. It's going to continue to run around this number. It's happy here. This is its long-term median, and we should see that continue for a while. Michael, you wanted to also look at some commodities, some currencies, and you wanted to look at the Swiss franc. No, this wasn't you. This was Bill Ford, and I know that it's WU, so I don't know why I'm wasting time. Bill, let me find this for you. It's not one we cover usually, but WU. WU, that's Euro FX. It's not the one I wanted. 067. No. Let's move on while I'm thinking about where I've hidden that. Aussie USD, this is important. Bill wants to know about this also. And this looks very, very familiar, doesn't it, Bill? Because this is doing exactly what all these markets do. It's ticking off the Daniel code numbers. Down it goes, finds that number, bounces. Down it goes, stops at that number, breaks through it, finds the next number 2 down, and it reverses. Finds this number on the close, and it reverses. Finds this number, 85.43, and it stops there. It goes down to the next level, 80.71, and it stops there. Breaks down. This may appear an unknown number. It's not. It's just that this is a 6-day chart, and the support is not on it. We had a rally from there, straight back up this bar to test 80.71 from the other side, and here it is hovering around a 73.15. And this is the next level support. It will break this. I expect it should have a rally soon. It's a long way down at the moment. It will break this, and the next number, as you can see from here, is going to be 65.64. And I've been saying for a long time that's the next decent support from this push down, and we expect continued weakness in the Aussie dollar. The commodity situation here is lousy. The government in Australia is in complete and utter disarray. I had great hopes for Tony Abbott and this government, and he's turned out to have feet of clay. And politically, the place is a shambles, and there's no leadership, there's no vision. Everyone's besotted with the trivia. You read a newspaper, you think the world was great and everything was booming, and it's not. Mining exports, the dollar value is absolutely collapsing because of this commodities rout. Coal is down, iron ore is down, everything in the extractive industries, what we do in Australia is dig it out and flog it. The price value is down considerably. Volumes have been holding up very well. Once we start to see volumes minimizing or reducing, that is major institutions using the basic common sense of responding to price signals, that's when you're going to see this thing really weaken a whole lot more. And I think that 65, 64 is going to hold it, but if it doesn't, we'll certainly have the next targets there available for you. Okay, what else did we have? Let me just make sure I haven't missed all of these. So that was Bill wanted to see the Swiss franc. I don't know where I've got that chart, Bill. I did do it for you. And you sent me 2 emails about that. The other one was what interests me is you're saying that some commentator saying there's the chief, CHF is the Swiss franc, has a 15-year cycle that's likely bottomed this year. Hey, mate, that's absolute rubbish. Anyone who's saying that could be an academic, which means they know nothing about trading, or they could be an economist, ditto, means they know nothing about trading. Alternately, they must be very, very young, which by definition means they know nothing about trading, because to people my age and even people a fair bit younger than me, we're not interested in a 15-year cycle. There is no 15-year cycle in the Swiss franc. That's just gaga land stuff. And that's people who've got too much time on their hands and they're fiddling with charts. I will have for you in a fortnight, Bill, I will find that chart. I did work it up for you, and I can't find it at the moment, but I have so many charts. But I do remember enough to tell you that the 15-year cycle is absolute rubbish, and that it's very much in a cycle like the others, that it's still a very, very strong position historically, and it's just ticking off these Daniel code numbers. Anything you want to know about long-term forecasting, put the Daniel code numbers on your charts and just watch them get ticked off and test at one side. If it runs through and misses it, it'll rally and test it on the other side. And that's just what markets do all the time. So that was you, Bill. Timmy wanted to know about gold. Timmy, I've done gold for you. Chase, thank you, Chase. I agree with, I don't know if you're with us today. I certainly agree with what you've said, and I'm doing my best to comply with that. Thank you. And Michael Here was the other guy. He wanted to know, Michael, about crude oil, sugar, and wheat. Sugar, we should, you should be seeing an enormous drop in prices at supermarkets, shouldn't you? I mean, you won't, but sugar, Lord, look at this. In fact, this might even be a sort of a semi-historic rundown. So let's go to the. This is the 24-day chart. Let's scratch this stuff up a bit more. Okay, there's your major low down there. This is starting to run off. Let's see what the numbers look like. There's your first retracement, and we've gone through that. You see here we've got nice recognition of these numbers on the way down. That swing's gone. Here's our next one. So once we've done one, we move to the next one, which is here. That doesn't sort of look like it's done much. It has really, I suppose. It's come off the top. It's hit the 2067, which is the 50%. It's told us it knows about that. It's ignored these last two, and it's got an $8 handle on it down there. These black lines are the last level of support and resistance for all markets. And this is the major swing. It looks like this is the one that's running. Michael, the next major support, remember this is a 24-day chart, it's going to be around that $8.60 level for sugar. Okay, so that's taken us for the best part of an hour, folks. Let me get on and start answering some of your questions. Run through this. Tuba, Tom, I've talked to you, you know about silver and gold now. Did I show you the moon chart? If I didn't, here it is. This is the full moon, and this is gold. Silver's probably even better. That yellow insignia there, annotation there tells you that was the full moon. Interesting, isn't it? That, there was your chart low, a little bit of a rally, sideways. Couple of days after the full moon is when this thing bit because it had to find its moonbeams first. These are all moonbeams, and whoosh, away we got that nice rally there, and an even better rally, as you say, in silver. Okay, let's see what we've got here. Neptune, when a Daniel code signal is elected but doesn't have a profitable close on the first day, how many days do you hold on position waiting for a first profitable position close? There was a buy signal for NASDAQ futures elected today that closed in the red. The rule is first profitable close, Neptune, so you wait until you get a profitable close, or you get an alternate signal, or you get stopped out. Now, one of the risks with this, the dangers with this, if you're not subscribed to the TO3 Plus, or if you haven't done a tutorial, I don't post all the signals every day for all markets. There are just too many for them, and it's possible. Let's have a look where the NASDAQ is. All these equities did the same thing. They basically elected the signals and then turned tail. NQ. Here's the NASDAQ. We had a plus buy signal. It got elected. You'd still be holding this, waiting for the first profitable close, which might be tonight. But your stop's under there, and you have to keep it there for the moment. Those of you who've done more advanced trading at tutorials will know a bit more than that. Basically, if you're trading off these website signals, Neptune, first profitable close, we haven't got it yet, or the next signal, or your stop. Okay, so we've got a comment here from I've been trying to follow this style of analysis for years. When this was first based on Financial Sense, couldn't wrap my head around it. Still can't wrap my hand around it. Okay. Many different market news writers. This is the most complex to comprehend. This is KP who's actually left. Wish the charts were comprehensible, but unfortunately they are not. No knock to Mr. Needham and his analysis. I can't imagine how any reasonable, intelligent person can follow the charts. Well, mate, lots of people do, and it is complex. It does take a degree of understanding. It takes some degree of intellect, but mainly what it takes is a lot of perseverance and hard work. And once you get it, it's just like driving a car. All the signposts are clear and you can see exactly what's happening. It is probably more complex than a lot of other stuff, but it is the most accurate analysis that the world has ever seen, certainly that I've ever seen. And I spent many years trying to learn from other people, and it wasn't until I started to find and invent the Daniel Code that I found this degree of accuracy. James's gold headed back down after this uptick. We don't know about quantum, James, but we do have blue line sell signals on gold at the moment. Tuber Tom, DX goes up, seems to buy more commodities. Gold and silver go down. Total manipulation. Look, I know that this is the fantasy with gold bugs, Tom, but undoubtedly there is manipulation. All markets are manipulated, but not in the way that conspiracy theorists believe. These markets, I mean, I see what you see. I hear every day about conspiracy theories in gold. Some of the more determined people write to me saying, you're a bloody fool, don't you know that this is all manipulated and conspiracies? But the fact is that, for as many years as I've been doing this stuff, which is a very, very long time, these markets turn exactly at the Daniel Code numbers and on the Daniel Code signals. And if you understand how accurate and precise these Daniel Code numbers and signals are, if they're manipulated by anything, let me tell you, they're manipulated by the Daniel Code. Which is Daniel Code itself is it's not a manipulative thing. It's just it's the DNA of markets. So for me, I see markets, gold and silver, going exactly at these Daniel Code numbers. I see them turning at these Daniel Code signals all the time, all the time, all the time. If you actually know what's happening and why it's happening, it's magic, it's beauty, it's belief, it's all sorts of wonders. If you don't know, you say, it's conspiracy. But really, it's not, mate. It really isn't. Todd wants me to look at New Zealand USD and coffee. Toddy, I'll do it next time. I've run out of time. Basically, Kiwi's doing almost exactly what the Aussie's doing. Bill's happy about that. ES US stocks, Jimmy, that's one very importantly that I want to show you. Here we are. Here's SPX, but I want it on the 6-day chart. Where's my 6-day chart? So here, dollar SPX. This one will be on the index, and here it is. Okay, thanks for reminding me, Jimmy. Here's the, scrunch this up first, and then we'll unscrunch it so you can see it a bit better. Okay, here's the 2007 high. Here's the crash low, which we call to the day, and a few ticks, which I love reminding myself of. And there are two dominant. This is the 2009 low right here, March 2009, which came on a DC 59 signal. Normally that's a signal for highs. It gave us this high up here, and 59 period later it gave us this low exactly. From here, this market has run inside a Daniel Code trading channel, the dominant one of which is in black. And it has run in that channel exactly the whole time, from that low until today. It goes up to the 1 standard deviation, down to 1 standard deviation. It's broken to 2 standard deviations only once. That was in October 2011. And it's continued to do that, finding support of the 1 standard deviation as it's run up this channel. I'm just going to take this off for the moment to show you that I've now, some time ago, added another channel, and this is the Daniel Code trading channel from this 2 standard deviation correction way back in 2011. And that gives us a little bit of a closer view of what's happening here. And you can see from this, I'll get it so you can see it, this market's run up, found the 2 standard deviation back in November 2012. Keeps hitting the 1 standard deviation, running between the 1 standard deviation, back to the median, back up high. This is what bull markets do. They keep hitting the high side, the high side. Here's its next correction to the 2 standard deviation. This time it couldn't get back to 1 standard deviation above. It got to the median and failed, and it's now right back at 2 standard deviations. This is very important support for the S&P. Now, don't get too carried away with this. This is only the minor Daniel code trading channel. The major trading channel, the one I took off, still has this at 1 standard deviation. But a confirmed break here, a close below this 2 standard deviation on this minor time cycle or a trading channel chart implies a much more substantial correction, which I would welcome. I mean, this market has been consistently and horribly overbought for a very, very long time. It needs a decent correction. Markets that have corrections and find new support are strong and safe markets. Markets that run without proper corrections are dangerous markets. And this market's got to that stage. So that's what's happening with the S&P. Thank you for pointing that out, Jimmy. Peter, can you explain what your moonbeams are, how or where they're calculated? That's not even on the website, Peter. That's a tutorial thing. Come along to my tutorials or write to me. Let me know you'd like to. I'll book you in and I'll teach you how to do this stuff in detail. Bill, where's DX in the trading channel? Thanks. Tuba enjoyed that. Where's DX in the trading channel? Don't forget, we can never talk about trend, including trading channels, without specifying what is the time frame we're looking at, because these markets can and do run different trends in different trading channels. So right here, this is the 6-day chart. This is a super trend up here. If you looked on the 24-day chart, you'd probably see it with just a minor correction. So we can run this from, this is the last important low, Bill, May, and we can run it either from the chart low or from the closing low. I prefer the closing low. It runs out here, and we don't have a first push out to anchor it to. So this is not a trading channel, it's a regression channel. This thing's gone up so quickly we can't get a proper trading channel out of it. Let's have a look from the other low here. This might be more informative. So here's the first push out. We have to hold that. And this is the proper trading channel. And much longer term, we get different ones, remember, on different charts. Once we've gone through 1 standard deviation, we go to 2, and we find we've had a push out above 2 standard deviations here, which can't be maintained for long, which is why it's come back. It's still in a very, very strong position. Expect it to wander along through here between 93 and 98 for a while, so it makes up its mind what it's going to do next. So I think that's about it, folks. I have run you over time, as I always do, for which I apologize. But thank you for being with me today, and do email me with anything you'd like to know. It's on the website here. Let's have a look. Here's our website, and if you go to contacts, contact us, there's the one. Click on that, and you'll find I'm here somewhere. Where's he put me? Down the bottom. Here it is, jneedham@thedanielcode.com, jneedham@thedanielcode.com. Do email me, and think about how good you can be at this stuff. If you get this stuff right, you can have all the gold in the world or all the tea in China. Sometimes the tea is more enjoyable on a short-term basis, but you can be very, very good at this stuff. And I do hope that I'll meet a lot more of you at tutorials. I was talking to Hank recently about the possibility of doing a tutorial, and Brian. And look, only thing I can say to you, you really can't ever be very good at this stuff without doing a tutorial. There is a lot you need to learn. You will get it all at a tutorial. If you're skeptical about it, there are people who've done tutorials recently. They'll be happy to talk to you and tell you they're thrilled at the tutorials, and they go away raving about it. And it all becomes clear to you once you understand how markets work. All of this makes wonderful sense. Okay, so that's it, folks. Almost 11:45 down under. Time for some Bloody Marys. Those of you who are not doing that, I pity you, but I wish you were with me. And Mr. Othmar Eisenyor, thank you for your kind regards, sir. And thank you for being with us today. That's all, folks. Bye-bye.